Does the past enable us to predict the future? Last week, we talked about how change is the only constant. And in today's episode, we're going to look at some of the big economic cycles and what history can tell us, or perhaps inform us about what's happening today. And we're going to explore whether today's unique times offers any nuances that may break some of those patterns. So buckle up, tune in. This is going to be a fascinating episode. Welcome to episode 7 of the Uncharted Territory podcast. Sam, looking forward to this discussion as always.
Absolutely, Dan. And yeah, it's a nice follow-up from last week's, change being only constant, and also from last night's workshop. We had some great, questions about looking at past cycles. What can we learn from them? And, how does that inform us as we move forward? And it's a huge topic. And I'm sure, like you, Dan, I've got so many cycles in my head that I want to pull together because the confluence of them is extraordinary. And zooming out, really does help you to make sense of the nitty gritty. And we can often get very deeply entrenched in what's going on a kind of present day level, and that's really important to try and understand. But I've found on my own journey that zooming out and getting really quite far and seeing the consequences of things has really helped me to deal with the day-to-day nitty-gritty. So it's that paradox again of actually zooming out has helped me zoom in. So those two forces actually can come together and be really beneficial. So I'm excited to dive into all the cycles and how they interplay and how we can relate them today and go on the journey as always.
Yeah. So, on our latest workshop, we were talking about the different asset classes, from cash, property, bonds, stocks, equities, and obviously crypto as well as a new asset class, and examining, what are some of the historical indicators that can teach us about the potential direction that some of these asset classes may go, really trying to make sense of the kind of current phase we're in. We're in a period of high inflation, we're in a period of high interest rates, political uncertainty, economic uncertainty, geopolitical instability, culture wars, internal disorder, rising inequalities. And the reality is these patterns may be unique in our lifetime to the degree that we're experiencing them. The COVID chapter was certainly a unique period in my lifetime comparatively, but that's when you start to zoom out. Okay, I have a phrase here that there is no such thing as a unique problem in life. There's just a unique set of circumstances that kind of surround that problem, and that becomes evidently and abundantly true when we start to zoom out and look at the patterns in history, economically, politically, socially, culturally. You zoom out far enough, you can see that like many of nature's systems, in fact, things operate in cycles. And those cycles are almost predictable patterns that can help us understand where we're at economically, politically, and where we may be going.
Yeah, absolutely.
It's difficult with a kind of fine degree of accuracy to predict exactly how things will happen and when they will happen because the time frames typically change. But even if you zoom out far enough, the time frames even to seem relatively consistent.
Absolutely.
So the adage that we fail to learn from history is abundantly true. So I'm really keen to get into this because I think if there's one thing that I've learned from examining these cycles, it actually brings a sense of calm, and it helps me to kind of avoid the distraction because there's so many minutiae in the chaos and the uncertainty that's happening right now. But you zoom out far enough, as I said, they're all predictable. Everything.
Yeah, and for me, Dan, it gets me out of resistance.
Yeah,
resistant to the fact that we are going through momentous things, and also there's this kind of I think we all have because we're here now. It's momentous to us, and it's huge, and it feel like the apocalypse. But that's because we're here for it. It might be the first time that we personally have experienced this section of a cycle. But that doesn't mean it hasn't happened before to generations going back, hundreds, thousands of years. So it's almost like because we're here, it's so visceral, but we can almost sort of get tied up in it and go, well, this is unique. It's almost like I had that thing playing in my mind of people thinking, this is the end. But there've been endless ends. And what are ends really? They're beginnings, aren't they?
Yes.
They're both endings and beginnings. So, but this is kind of thing, because it might be your first, or my first, or the people watch this, our first experience of this part of a cycle.
Yeah.
And maybe it's a crisis part of the cycle. That is really visceral and really powerful and quite, intense. But that doesn't mean that hasn't played out for people endlessly over. And those people, those times might have thought that was the end of something, but it's just a shift and the beginning of something new. So endings are beginnings, and we always discussed the psychology of humans is often to get over-identified about where they are right now, and forget that change is the only constant, and that busts, are always followed by booms. Booms are always followed by busts. So that's going to play out. Things are going to shift. It's not the end. It's a change and a shift rather than an ending.
Yeah, and we may get into it during the conversation, but the kind of economic and political cycles are almost like the seasons. We like clockwork. Summer follows spring, autumn follows summer, winter follows autumn, and we start again. And those phases play out in our weather patterns, in our agricultural patterns, to a degree during our own kind of circadian and ultradian rhythm within our natural energy cycles, the moon cycles. All things have a rhythm, and it's fascinating to witness the kind of bigger economic rhythms, political rhythms. And it's almost like, we've been talking about Bitcoin and things like that. And, during our crypto cafe session, you pulled up the chart and showed that, we have this bull run and then there's a dip, and people really focus on the dip, forgetting that it's actually part of a macro trend of an overall rise. Yeah. And that to me illustrates the importance of understanding the small cycle and the big cycle, because but we have kind of these economic cycles that happen every kind of 10 years, roughly, where we follow the same patterns over and over. It's like a decade shift.
Yeah.
But then you zoom out and you've got like these 200 to 500 year or 100-year cycles that are bigger cycles, which play out. And within those bigger cycles, we see these smaller cycles. And the more we can kind of get our head around how these patterns play out over time, we can make sense, of the present moment and look at it with a degree of calm reflection, if we can get ourselves out of the noise and the chaos when it arises, because that's the phase we're in. We're not in that period of peace and prosperity right now.
We'll come to some of the reasons why we're in this crisis.
Yes.
What I call a crisis cycle of some sort. Yeah.
Yes. And as such, we've got kind of political divisions, great polarization amongst society, which has been amplified by COVID. We've got recessionary markers in the economic cycle. So, when we start to look at the indicators where we're at, we can start to think about where is it going to go next. And what's really interesting is, because we are increasingly in a digital world, we're so drawn to the minutiae and the madness of what's happening. It becomes harder then to zoom out. Yeah. And the reality is the changes happen incrementally. It's like, I had my hair cut this week. I haven't noticed the day-to-day growth that's happened since the haircut.
Yeah.
But and even on a week-to-week basis, I might not notice it. But lo and behold, all of a sudden, I wake up one day, look in the mirror, and go, "Could do a haircut."
Yeah.
So again, I might grow my hair longer over a longer cycle.
Yeah.
But then eventually I get it cut. I'm not saying that our haircuts choices are a reflection of economic cycles, because some people never cut their hair. But
don't trade based on Dan's haircut.
No.
Is that a buy signal, Dan?
Yeah. But my point is, we don't notice those incremental shifts as they're happening.
No.
It's only when we take an aggregate view of where, and it's the same. My son, who's 19 months old now. My mother's been unwell for a period of time, so we haven't seen my parents for a little while. They're gonna notice how much taller he is than when we last saw him. Whereas Lizzie and I, on a day-to-day basis, we don't see it. It's only when we look at photographs and go, "Wow,
yes,
he's growing fast."
Yeah,
and that's really what happens within the context of the cycle. We only see the little fragment of the cycle, so it requires us to take a zoom out.
And it's much easier to see back in hindsight, like looking at charts. A bear market doesn't turn into a bull market overnight. People want it to. And sometimes, I had an email actually with some clients said, is this the bull market now? Almost like a binary question. I understand when you're new to these kind of cycles of wanting to almost label it as two binaries. Right, was it a bear yesterday, now we're a bull? Well, actually, it's a process. And you're exactly right, Dan. In hindsight, you can watch them, but as they're playing out, the mind wants to grab and say, where are we? But it's hard to know exactly, and it actually does happen gradually. But it's the attachment to where you are in energy. You can't stop the cycles, but you can navigate them and how you relate to them. So if you understand where you are, then you can act accordingly. And I think that's the point. Sometimes people get over attached to where they are rather than just neutrally look at where we are and know that things are going to shift from there. So it's always, I think that's you said it there. It soothes you. It soothes me of getting out of resistance, knowing that these things have to play out,
Mm.
and we need to move through them. But understanding them can give us a great perspective, so we're not so our emotion not so caught on them in a short term and identified with them. Because you can get yourself in a lot of trouble in a bull market if you don't understand that bear markets follow. You can get yourself in a lot of trouble in bear markets if you don't understand that bull markets will follow. When you understand they both will, then that gives you a much different perspective, and you don't react in the same way at all. They are what they are. They're neither good or bad. They just are, and
Yes.
then you can react to them.
Yeah, so I think what's tricky in the moment, whether you want a bull run where things are rising, it's assessing when will that peak come, because that's where the uncertainty is in. But again, that assessment usually becomes more tricky when we only focus on the narrow parameters of its current status. And again, often when we zoom out, you can see with stocks, you can see the patterns, when without getting into the technical analysis of how to look at charts, people put like the ceiling and the support on a chart to see where the typical variances are. Yeah, actually zooming out long term, you can see where those historical highs and lows are, and of course there's breakout patterns that emerge, and there's recessionary patterns that go beyond the floor. But the reality is there are those observable patterns. In the context of crypto, where things are difficult is we don't have, as we talked about on Wednesday, we don't have like the historical relationships with other asset classes or interest rates and inflation to the same degree as we can observe stocks and shares or bonds or gold and silver. We can see how those asset classes tend to fare during different stages of the economic cycle. But I would even argue now that there are already observable patterns, as you shared on Wednesday, the correlation between the value of the dollar and the performance of Bitcoin, and similarly with interest rates and inflation. And what we can also start to already see is the factors that drive all of this, which is human psychology, haven't changed in the context of digital assets. It's the same. It's the same drivers.
Yeah.
So once we know this, we can start to make sense of what could happen. But I still, even as someone myself now who's becoming increasingly interested in investing in different asset classes, despite having the knowledge of the kind of wider cycles, with the reality is it is still tricky to predict when a bull run will come to an end and when a bear cycle will commence and when that will end. But you can see the kind of loose trends that underpin those variances.
Absolutely, and so when we zoom out to the bigger timeframes, I know it soothes me in a lot of my financial reset talks over the last couple of years. I've always talked about trying to get perspective of why we're in such tumultuous times overall. So rather than just looking at it financially, looking at it socio-economically, geopolitically, that it's the confluence, Dan, because there are all these cycles, but then sometimes you get periods in history where so many cycles come together, real pivotal moments, and that's where we are now in history. So that's why it's so explosive and so visceral, and we've seen what we've seen in the last 2 years, and we're going to see a continuation of that. So that really helped me get perspective. It isn't just a binary, okay, the control structure decided to ramp up at that time, here we are. There are so many reasons. And I like to look at, as you know, the astrology, come into that and overlay that. And that's been interesting this week because we're in that eclipse period again. And people always know I like to talk about the eclipses because we're in a double eclipse period now. We had eclipse on Thursday morning, and we've got another eclipse on the 5th, 6th of May. And it's interesting. There's a lot, as I think you've looked at, Dan, a lot of data come out of the financial markets this time. I've seen a number of drawdowns of the market on the last 3 pairs of eclipses, and that's happening again potentially, and could escalate. So the big cycles, I don't go into all of them, but just let's look at a few of them. And this does tie into, I'm going to look at astrology just briefly. We have got this Pluto moving into Aquarius, which began in March this year. And the last time we had that was about 225 years ago. And around that time, we had the French Revolution. We had the start of the Industrial Revolution. So it's quite a revolutionary energy coming through. And that's what we're starting to see it happen again now. So that's really interesting. We got the American Revolution as well in that period. So that's a real period of shift. And we're moving from Pluto into Aquarius for this next shift. And Aquarius is about freedom, values, and a lot of it is about technology and shifts in tech. Dan, I'm not surprised when I look at that cycle that the kind of AI explosion that's coming to the consciousness happened around this time
Yep.
as Pluto moved into this energy. So that's absolutely huge, and technology is going to play a huge part in building new systems. So this is part of those cycles, overlapping with so many of the shorter term cycles. And I think this will tie into us. We might go into the reserve currency of the world.
Yep.
That's a kind of roughly 100-year cycle that plays out, and we can look back through the last 2 centuries and watch how that's played out across different geographical areas and currencies. But also something that really fascinates me. I don't know if you read the book, Dan. You read the book, The Fourth Turning?
Yes. Yeah.
And again, that's looking at within that 100-year cycle, you've got these 4 kind of secular cycles within them of about 20 years, which are fascinating. And a lot of people argue we're in the 4th one of that, which is the crisis cycle.
Yep.
So typically that starts with and we look at the current reserve currency of the world as the dollar, the US currency, looking at that really beginning in earnest in the 20s, but really being cemented in Bretton Woods in 44. So maybe the first section of this of this 100-year cycle would be the high from 45 to 65, then moving into the awakening period, which 45 to 65. Then we have the awakening of consciousness, and then the unraveling and the kind of culture wars from 84 to 2005, and then 2005 to 2025, the crisis part of that cycle.
Yep.
And interestingly, look what really exploded in 2008, and we're in the continuation of that. So, and potentially a lot of that coming to the head in 2025. And so it's really interesting to look at those perspectives where we are. And I think that gives me a lot more perspective of why we're seeing so much happens. And that's just repeated over and over again. And here we are again.
Yeah. There's so much. It's so rich. It's and even I've focused on the COVID chapter and the kind of rise of centralized authoritarian power structures. To a degree, that's even when you take a look at those cycles, we can see that we were due some sort of phase that would create the parameters for such the revolutionary period to arise. It's almost predictable. You couldn't predict that COVID would have been the catalyst necessarily, although some would argue you could if you look at the activities of the actors involved. But we also can predict that the counter reaction will happen, which is why, and it is happening. So whilst it was small at the beginning, and when I look at my kind of Facebook memories and look at the comments of the things I was if I was asking questions as early as January 2020 and getting slammed, and how the attitudes have changed and continue to change, and how the kind of resistance and the freedom movement is beginning to unfold globally.
Yeah.
The counterbalance always happens.
Yeah.
Now, as many know, that it will probably get worse because we're still in that crisis cycle. It's got to come to its conclusion. But the counterbalance is already the building of the next phase.
Yeah.
It's the beginnings of the next cycle, as is that move towards that new technological shift.
Yeah.
So we've got that conflation of historical cycles, but we've also got the emergence of those new cycles. And it's interesting because those emergence of the new cycles is actually what brings about the end of the current cycle.
Yeah, totally,
They overlap, which goes right back to what you said at the beginning, is that the end and the beginning intersect. And they're one of the same.
Yeah. Yeah, and that's that, like you said, Dan, the ingredients are different, because of the era. So the qualities of it and the kind of what goes into the mix are different because of a different age.
Yes.
We live in different times, but the overall energies, and the cycles do repeat. And I think it's really interesting, this, I've talked about it, this shift towards technological thing is part of an Aquarian energy. Yep. An air sign moving from Pisces, which is very water-based. We can look at that from the kind of maritime law we've been under, and all the water, language around money, of liquid assets, river banks, currencies, citizenships, partnerships. That's all water-based, and that's come from the age of Pisces. Okay, that 2000. We're shifting into more air, which is that digital, which is the technological. So that's really interesting. That's part of this paradigm shift. So it's almost like, Dan, within those 100-year shifts within Pisces, you've got all these rise and falls. But then actually we're having the confluence of another one of those 100-year shifts coming to an end, the fourth turning of a 100-year process, confluating with actually a 2,000-year shift as well.
Yes.
So that's why it's so momentous, and that's why, it's interesting to look at the way reserve currencies have risen and fallen before this. But what we've got is actually the reserve currency of the world, the dollar, coming to its end in this next 20-year, this kind of window, but also into a different age. So I think the shift won't be, like the shifts from we had the, I won't go into all the cycles, but the Italian Renaissance period standard, which was based around the florin in Florence and the ducat in Venice. And again, interesting, that's all about the water system, all in Venice on the canals. The Venetians, who are the Phoenicians. There's a huge topic on that about Phoenicians being phony, coming out of Tyre, which is where tyranny comes from. That's a whole other podcast or series of podcasts. But then moving into, empires like the Portuguese Empire, the Spanish Empire, the Dutch Empire, into the French Empire, into the British Empire, and then towards that US, military industrial complex empire. So all those shifts have happened, but now we've got the shift of maybe the end of that last 100-year reserve currency, because they've all lasted initially between 18 and 120 years, Dan.
Yes.
Which is so fascinating.
Yes.
So, the dollar, we're in that period of the dollar shifting. We can see it happening and this is where we can look at the minutiae today. We can see in the news the breakaway of the BRICS. I'm sure we'll discuss that more. And the Saudis looking at the Enbridge currency. And so we're seeing that breakdown beginning. But what we've also got on top of that is a bigger shift.
Yep.
Which is this technological shift, and this shift perhaps more away from empires being geographical to actually being more technological, potentially technocratic, and the way value and trade is moving is different. I think a big part of this shift is, obviously the internet has transformed everything in the last 20 years. Blockchain's the next iteration of that, but we're moving from the internet of information to the internet of value and shifting value. So that's why I'm fascinated by the cycle. So we are in that 100-year shift, but we're also entering a whole different modus operandi of trade and transacting. And I think the shift will be less geographical this time in terms of where the power structure moves, because that's kind of the old world of Pisces and, people going out in the water and conquering countries in that manner. It's a whole different shift. It's a large part of that quest is a technological shift.
Yeah, I mean, that's where things get really fascinating, because that brings unique qualities to our time, but the principle is still the same.
Yep.
People would strongly argue for and against this, but I believe that the age of the dollar reserve is in decline. It's what state is it at the mid-cycle point, or is it in the kind of late cycle phase? It's hard to tell. I mean, I'm increasingly looking at all of the indicators to try and understand and navigate. As I mentioned, you're in this the short cycle of the bigger cycle, to see what the kind of likely timelines of these things are going to be. But it's almost an inevitability that the dollar as a primary reserve currency will fall.
Yeah, but to come back to your point, Dan, it's almost it's going to take time.
Yes.
So there isn't a day, there isn't again that binary one. We don't go from a bull market to a bear market overnight. A reserve currency doesn't fall in a week.
Yeah.
As some catalysts, it's happening, but it's a process. And I think it's a process that will take, happen over this next, 20-year period.
Yeah. So, and again, the economic contraction during COVID, particularly looking at kind of the stock market decline during that time, was unique to that period, in the same way that the banking crisis in 2009 or prior to 2009 led to that dip. But since 2009, if you just look at the FTSE 100, the trend has clearly been on an upward trend. And the dip in 2020, we could argue, is that temporary, but we've already seen the bounce back, and the FTSE 100 is continuing to rise. And we haven't seen a pronounced or continued fall in unemployment. Many predicted that we would see a big rise in unemployment post-COVID. It hasn't yet manifested, and growth is low, but it's not in rapid decline. So but we are also seeing inflation rising rapidly, and we're seeing interest rates going up. You know, it's speculated that interest rates are going to hit 5% again. You know, will governments now start to use more restrictive policies? Asset prices are continuing to rise, but at a slower pace, which these are all indicators of a mid-cycle point. But as inflation continues to rise, interest rates continue to rise, that will inevitably cause a slowing in economic growth. And ultimately, those things will almost by inevitability lead to some form of recession, which brings us into the late phase. And then, you know, governments try to reduce the deficits, you know, asset prices like stocks begin to decline. You might even see a stock market crash or a housing market correction. But over what time frame will that happen is hard to predict, because right now I'm looking at, you know, you mentioned the moon cycles. You know, this week we saw the beginning of kind of earnings announcement season. There's been a lot of earnings announced this week already. Some in the news, quite a number of major companies who are announcing their earnings are either lower than expected or losses being made. But over the next 2 to 3 weeks, and interestingly, you mentioned the next eclipse. You know, over the next 2 to 3 weeks, we've got the majority of America's big companies making their announcements, and if you get a number of large companies starting to reveal underperformance or negative performance, of course, then investor confidence drops, consumer confidence drops, and those things could be the tipping point that brings us into that late stage of the cycle where we see that sudden decline in stocks. Because at the moment, we're seeing again, it's that you zoom in, zoom out. You know, yesterday the markets dropped a little bit, they've kind of corrected, and it's kind of trying to understand where the tide is. But if you zoom out far enough, you can almost. I feel relatively confident that at some point we'll see that fall. Yeah, and it might be that fall itself that triggers greater social unrest, because already we know that the middle class is being eroded. The growing inequalities are being viscerally felt. We're seeing people protesting, social discontent. We're seeing, you know, disorder amongst different groups of people. Again, these they take different forms. You know, we've got the trans rights debate right now, LGBTQ plus. I've lost track of how many letters. No disrespect, you know, it can't we just have a word? But these divisions are, again, predictable patterns of this phase in the cycle. Yeah. Because when we're in a period of prosperity, and even though inequalities may still exist, as long as most people's standards of living are reasonable or growing, then those divisions, the political divisions, the social divisions, the cultural divisions, usually are at a minimal level. So the fact that we're seeing all this carnage emerge, it's not a surprise. No. It's in tandem with the predictable phase in the cycle. Yeah. But how long will this phase last before we enter into the decline is unknown. But you know, the banking we've talked about on this show, the Silicon Valley Bank collapse and other banks starting to wobble. The warning signs are there, and I will be watching with really. I mean, next week's podcast is going to be fascinating. The next 2 weeks, Sam. Yeah. As we look at what happens to the earnings, that they could be real indicators of the next phase of the cycle. But the point of this is, we can look at that and say, okay, a decline is almost inevitable. We can prepare ourselves for that accordingly. And there are things that, again, if you look through historical patterns, and this is what we were talking about in the Navigating Financial Reset workshop on Wednesday, is that once you know what stage of the cycle you're in, you can see what assets typically do during those times. So
and what actions to take.
And what actions to take.
Because it's where you go with the cycles, Dan. And because we always want to reiterate that it's not that the powers that be or the elite class run all the cycles. Yes, they manipulate things enormously, but they're not running the cycles. It's just that they want to harness them and use them and are aware of where they are in the cycle. They don't want you to be aware. That's about. They don't want you to know where you are. Once you know where you are, you can take sensible action, and I think that's a really important point to come back to, empowering ourselves that it's where you go with it, and that a lot of these harnessing these energies, they understand the cycles. They're trying to build, you know, their reaction to it, But the ability to do that is with all of us.
Mm.
And it's always important to remember that. So, as much as they understand it's a crisis cycle and understand that this is a big shift, so they want to cement and build a new system coming out of it.
Yep.
But it's not we always come back to this point that the ability to build and create during these times and harness that energy of a shift is not unique to them by any means at all. It's universal.
Yep.
They can't control it. They want to corral it. So I think, and in the process after a crisis cycle is where the cementing of the new kind of paradigm is. But it's almost like in this period, the cement is still wet, Dan.
Yes.
It hasn't dried and hardened, and I think that's why I view this as a period where we really need to be proactive and moving forward, not just thinking this is all happening to us. Because even I think people can get over deterministic about cycles and astrology. They are cycles of astrology, but they're not deterministic in themselves. They just mean that there's an archetype behind them, and they need certain things. But it's a world where there's an interplay. That's the archetype energy, but we have a free will to go where we want within it.
Yes.
And I think that's really important to come back to.
Yes, because yes, A, navigating what's happening gives us that understanding, but then B, the choices that we make. And the point that you made is so important, because when we're at the effect of the situation, we're reacting to the situation rather than responding, because there's a big difference between a reaction. It's a visceral, almost fear-based reaction to the uncertainty that is created by the circumstances, because obviously we can't change the events that happen outside of ourselves, but we can choose our response to those events, both from a kind of psychological point of view in terms of how we see and feel about those situations, but then more importantly, by determining how we see the reality, it shifts how we feel about it. And when we shift how we feel about something, that's when we can take action towards it. And it's fascinating right now, because we're also in a cycle, in the media cycle, where it's fear based, it's highly it drives high level of anxiety, and it's become a norm. It's become a norm, both, and we can't just point fingers at the mainstream media. The alternative media landscape is as bad, if not worse, in some cases. It's rife, and that creates a state of disempowerment. So it's being able to zoom out, take stock, and actually start to feel a sense of calm within ourselves, so that then we can take positive action. Because it's if we stay in a state of alarm, then we're just reacting to the situation and we're not responding. And this is where the opportunity is to make conscious choices and to proactively respond to what's happening, whether that's politically, economically, or socially. But those opportunities are available to us in any given moment.
Yeah, it's how you relate to anything. So I just try and really simplify it. Look at a Bitcoin cycle of bull and bear market. Somebody who's not empowered, who doesn't understand cycles, can be a victim of it, and the other person who understands the cycles can do extremely well of it. It's the same chart. It was the same cycle. So again, it wasn't the cycle did it to you, did it? The cycles don't do things to you, but how you relate to them when you understand them is how you position yourself and what actions you took based on. So we talked about, you become the driver of your life again. Because that's what I mean, that astrology or other bigger cycles, they they bring through archetypal energies and trends, but you don't be a victim of them. You grasping the energy and driving it yourself, and that's what we really need to get out of generally, is that victim place of and being beholden to this is happening, that's happening. It's almost like, when I talk about financial reset, Dan, when I start a talk, the first thing I always do is just say, let's get out of a fear around this.
Yes.
And that's not because I'm rose tinted and I'm going to say, don't worry, it's all good. I'm coming with balance. But the first step is, let's just look at it. And I like the way you say it, Dan, as it is, not worse than it is, not better than it is, just as it is.
Yes.
And come with it neutrally and look what's going on, because and the powers be want us to come with such fear and it's almost like a trigger phrase, like, it's a crash coming, a financial reset. These are shifts. And let's just look at them in that sense and transmute the energy first. And that's the first step out of being a victim of cycles or markets, and actually becoming somebody who can navigate them and ride the waves. Waves on the ocean are always coming. You can either ride them, or you can sort of be very passive and get smashed on the head with them. So it's the same medium, but how you favor, how you, what's the word? Yeah, how you're affected by them is largely, there's a lot of that can come back to your own control and your own ability to navigate.
Definitely. And, you've mentioned it in a couple of the episodes about kind of reference to elders,
Yeah,
those that have been through these cycles before, who can offer guidance on how to navigate these times. The tricky thing is, and I'm turning 40 this year, and I tend to look back at different periods of my life with rose-tinted spectacles. And I think a lot of people have been doing that post-COVID because
yeah,
of the specific circumstances we find ourselves in. People looking back to the old normal as early as 2019, saying we want to go back to those times, and
yeah,
it's easy, and I understand why.
yeah,
It's easy to do that, but the reality is we do tend to look back with rose-tinted spectacles. So, and it's fascinating to what you said about the things that we have and have not experienced during our lifetimes, and obviously that varies depending on how old you are. Because
yeah,
as someone like myself who's nearly 40, I've never lived through double digit. Well, I have lived through it, but I've never lived through it as an adult.
yeah,
Because it happened in the 80s, but I've never lived through double digit interest rates.
yeah, yeah, absolutely, uncharted territory.
Totally uncharted territory. But again, you look back to the 1970s, the 1970s, 80s. These were periods of high inflation at times and high interest rates. But we've never, we're looking at the rising interest rates, thinking 4 or 5%. And if you're someone who's my age, your expectation is that it won't go much beyond that, because in our lifetime as adults, certainly as adults, it hasn't happened.
Yeah,
But if you look at what happened to the interest rates and inflation post-war period, World War II, from the end of World War II, we saw Bank of England interest rates go up to close to 18% in the 70s, and we've seen inflation hit like 20-25% during different periods across the 70s and 80s. It's almost beyond our scope of imagination. We're seeing double-digit inflation now and interest rates hitting nearly 5%. But predicting where that will go after a global shock like COVID, it's not a war, although, again, some would argue it's a war against humanity as such. And, in fairness, even Boris Johnson said we're operating on a war footing,
Yeah. Well, I think that's part of the move from overt tyranny to a psychological war, isn't it? I mean, that's a huge part of this shift, which is, even if we look at the reserve currencies, they rose and fell on quite overt, land grabs and, slavery. You look at Portuguese empires, and whereas it's become less obvious to the people who are less aware of how tyrannical it is, because it's not subtle to those with eyes to see, but it is more subtle. I mean, if you look at the modus operandi, look how it shifts from very clearly kind of empires just going out, land grabs, people grabs, enslaving nations, stealing their resources. It's moved to, you think about the last 100 years of the American, US dominance. That's been very obvious to people who might have a deeper awareness, but to a lot of people, that looks organic.
Yep.
And as we know, a lot of the power grabs has been based on spreading democracy.
Yes.
That's and I think, I don't know if you read John Perkins' book, Confessions of an Economic Hitman. Brilliant, because he had an awakening and wanted to blow the whistle on what his life was, which he was a consultant for one of these firms who literally was a wing of the military-industrial complex, basically, using their financial muscle to indebt, particularly South American countries he was involved in, getting them indebted, getting them into that slavery via the financial system, via the World Bank, via loans, the IMF, International Monetary Fund. So he had all the, and it's a really interesting book because it shows the machinations of how that empire really, really grew and how they tried to keep hold of power was by going in there trying to corrupt leaders who weren't in tune with them. If they didn't sell out to, bribery or pure, you can have whatever you want if you toe the line, then it moved on to, well, in debt, get them into huge debts, giving them huge loans, get them to privatize their industries, get them into trouble that way. And if they still didn't play ball, because there were some really powerful South American leaders who really were for the people, like in Ecuador and people like Jaime Roldos, it became assassination time.
Yeah.
Either send in the jackals literally to create a plane crash, or create fake uprisings.
Mm-hmm.
Using social engineering to actually create a fake uprising and overthrow governments to put their own puppet in. So it's, again, everything shifted, and actually we're getting more subtle Now it's much more about almost a war on information and a war on people's minds through social engineering. So the modus operandi has shifted, Dan, hasn't it? And it's got very obvious but more subtle in a way. So it's that paradox. And
Yes.
so the times change, and right now I think the shift will be much more technological and about controlling things through information and as we can see. I mean,
Yes.
I know how censored you are on platforms.
Oh, goodness me. Yeah. I mean, I got a 90-day ban yesterday just for. I think it was because I commented. Someone had put up a picture of how like the whole south coast of England within the next decade will kind of like collapse into the sea, and I was,
again.
So I put like that image of the Statue of Liberty, like over 100-year period, saying this is the drastic effect of, because it just shows like there's no change on the.
Yeah.
I mean, it's simplistic. It was meant as a tongue. Obviously, Facebook can't discern what is tongue in cheek, but I think it was that post because it's got a like you fact checker over it. I think that's probably triggered it. But we're in that period of control, and again, Facebook didn't exist in the last cycle that we had like this. These technologies didn't exist in the cycles that we had like this, but the control of information this is not the first rodeo.
No,
the powers that be have. So it's interesting because we can start to discern where we are and start to make predictions about what's coming. So and I think like people will be asking what to expect, and I think I have I'll share some of my views. So I'll be interested to hear some of yours. So I think the social discontent will continue to rise. So we're seeing protest movements of all kinds taking to the streets. There's a big set of protests happening in London this weekend. Some around climate, some around social justice issues. We've got the freedom movement growing.
From all spectrums.
All spectrum. We've got the kind of rally against the energy bills and the cost of living crisis. That's going to continue. The polarization will grow. Will become more and more divided. But then again, politically, at this point in the cycle, you can expect a shift in the kind of political norms. So, this week we've seen Robert Kennedy Jr. give his announcement about his running for presidency in the United States. We're obviously approaching a general election either at the end of 2024 or beginning of 2025 in England or UK, I should say. And as a result, we can expect potential political changes, because what happens when you see that social unrest, when you see that rising inequality, the politicians will speak into those problems and take a kind of populist stand to try and appease people's frustration and anger and say that they're the solution. And that will mark the beginning of a different political phase. We should usually see a change in the political emphasis again during these. These are all patterns. It's almost predictable. And I'm not a gambling man, but if I was, it's almost the political, social conditions are predictable. So we'll see that continue. The geopolitical situation, Russia, Ukraine, I think that will continue to escalate to a point where there may be international intervention or greater cooperation between the likes of China and Russia and the BRICS countries, which could eventually bring an end to the war, but be a mark of power and a mark of strength amongst those countries and rival to the United States and its dominance. But over what time frame? This is where it's easy to start thinking, oh, this is all going to happen in the next 12 months. Even looking at inflation and interest rates, talking about rising interest rates, if it does go into double digits, it may continue to inch up over the next 12 months, 24 months. It all depends on when that kind of spark of a recessionary period hits, because even now, looking at the earning reports, part of me's sort of anticipating a decline in the stock market, but we might just be at the plateau stage. It may just be getting to that point where we reach the peak, but then over the next few years, we start to see a decline of the stock market. But it's hard to tell. But I suppose all these things sound rather bleak. But the important thing is to remember what follows it.
Well, and that's why, people, it's always important to go, the world isn't ending. I mean, some might say the world is ending, and that's another debate. Well, that's somebody
Yep.
might have a viewpoint that literally the world is going to end. But generally, that's the point, that when people lose confidence in assets and these markets drop, it's not the asset itself that's become a problem. It's the confidence, isn't it, Dan? But really, the smart money knows that things are undervalued.
Yes.
Things can be oversold, which is when they're undervalued, and
Yes.
they can be overbought, which is where
Yep.
they're overvalued.
Yes.
And understanding when things are booming, whatever, that it's too hot, and understanding when it's when things are really down low, it's too cold, and there's a middle road. And that's why there are growth bands that go between that. If you look at that's what's interesting about, just look at Bitcoin as an asset itself. People get very scared by the volatility, understandably, and that's part of that's because it's a new asset and it's quite young and it's quite small. But literally, at $69,000, which is peak, it was overbought, overvalued.
Mm-hmm.
And then it comes all the way down to $15,500, it's undervalued. So people that bought at 69,000, yeah, they bought it at a time where it was overvalued. The people who bought it at 15,500, it was undervalued. Well, they've now doubled their money.
Yes.
But when you look at the chart overall, there is this what some people label the fair value growth chart in between that, which is why when you don't understand these things, you just hear the headlines. You think, oh my God, Bitcoin's just not worth anything. It's unbelievable. Actually, it's the best performing asset by multiples of thousands compared to almost anything in the last 10 years. I always give that story of, I gave it in the talk I did recently because I think it's really important to compare, that going back to the COVID crash down of 2020, where the markets dived on that black swan event of the announcement of the pandemic, markets crashed, and a Bitcoin was about $3,000, around that figure at that time. And if you'd had two people, say it was me and you, Dan, on that day, say I was the crypto guy, I said, I'm going to buy Bitcoin. This is, tumultuous times. I'm going to buy Bitcoin. I'm going to spend my $3,000. You're thinking, well, I don't understand crypto. I'm scared. I'm going to stay safe and keep my $3,000 in the bank. If we fast forward to today, right, you may, if you just look at the news, you may assume, well, Sam's done a terrible thing there because look, crypto's crashed. That's a disaster, and I've stayed safe by putting my money in the bank. But the reality is today, you've still got $3,000 in the bank. But as you well know, with inflation and the increased cost of living, your purchasing power is diminished considerably.
Yes.
We can argue exactly what it is because they fudged the consumer price index figures, leaving out important things. But let's say you've lost 20% of purchasing power, so you feel like you've done really well, and without understanding asset classes and crypto, you've read the news, you think I've lost all my money, and yet I've done a 10x on my investment. And the reason you think all the money is because Bitcoin's down a lot, but it's still 10 times up from 2020, despite being 70% down from its all-time high. So again, the volatility of assets, understanding the growth curve within it versus being sat in fiat currency and understanding its depreciation over time. So yeah, these are interesting times to understand these kind of parameters. And again, what do we say? Educating yourself about these things is what can mean you can do well.
Absolutely. And within the workshop on Wednesday, we made the comparison with the .com era because, when we saw the .com bubble burst, we saw, a huge collapse in the stock prices of these new digital companies, online companies. And the same predictions were made that we've seen with Bitcoin is that, that was it. The tech era is over. The golden era is gone.
Yep.
But if you look at any chart since the collapse of the .com era, it's a blip in the ocean. It's just a drop. You can see like it's funny. It actually is laughable when you look at the .com era on a chart and you think,
well, you almost can't find it.
No,
but it's always where is this huge bubble that burst? Well, it's insignificant to where we are today because we're in an ocean of liquidity. And and I think that it comes into the short-termism. The short-termism of being so spiked. This by design, by the news of the day, and your emotion being so identified where you are, and that can leave you ungrounded to go, hang on, things are always changing, things will rapidly, things will shift in the future, things will come back, it's not the end of the world. But it's constantly pulling you into the visceral short term. So when the market's really low, they pull people into sentiment, it's going to go down forever, it's going to zero. And when the market's high, they pull people into, it can only go up, and you're going to, so both are false.
Yes.
But they're so powerful and they're so energetically fear and greed.
Yes.
And if you can bring your own emotion, take your own emotion of fear and greed out of it. When we had somebody on the call last night who shared really well that they'd been through a cycle already in crypto, and had been through that and now learned and felt free of that, as I do.
Yes.
I mean, not free all the time, of course. It's,
Yes,
it's
yes.
I'm human, so
Yeah.
fear and greed is spiked in me. Of course it is, but not. I don't feel a victim, anymore of those cycles. I feel empowered by them, and I feel excited because I know I can take good action at the right time. So, that short-termism and not looking at the bigger picture, while you're looking at action today, but still look at the bigger picture at the same time, that's what's powerful and gets you out of that being manipulated by the energy. So you're exactly right, Dan. The headlines I shared, the Economist cover in one of the crypto cafes I did, that called the end of Bitcoin, the end of crypto, and we're over 100% up a couple of days ago from that point. So yeah, it's
Yeah.
they always want you manipulated by that kind of visceral info, and also the internet age of people drowning information.
Yes.
And also, if you think even to prior crashes, they weren't 100,000 YouTubers all trying to point at a day and saying it's tomorrow. It was nothing happens overnight.
Yeah.
And I won't go deep in this, but a lot of people in a lot of research I've done said that the COVID scam was multifaceted, that it did cover up what's happening in the financial system in late 2019. There's
Yeah.
almost a liquidity lockup late 2019 that they need to inject all this money into the system to keep it going for a while. So it's happening. I always say, when's the financial reset happening? It's happened. It's happening. It's going to continue to happen.
Yes.
You know.
Yes. Yes. Yeah, fascinating. Yeah, those headlines from the .com bubble. It's like they're the same now, but this is where it's interesting as well from a analysis of the crypto space, the blockchain Web3, because what people are struggling to understand at the minute, because people still think of these things, as we've talked about countless times on these on the show, is that people hear the word cryptocurrency and just imagine a digital version of a transactional currency, which in some cases that is what some of the crypto coins offer. But the technology that's being built, the distributed ledger, the distributed technologies, blockchain technologies, Web3, these are the building blocks of the next phase of technological development. So when we look at the .com crash, you can imagine at the time many people were doing what we're doing. We're speculating.
Yeah.
People are speculating which blockchain is going to dominate. And you would have had the same during the period of the .com bubble. Which companies are going to stand the test of time?
Yeah.
And you'd have some people putting all their bets in certain companies with absolute certainty that this company is going to make the distance, and then lo and behold, a year later it collapses and disappears. Other companies that were written off as never going to make it, and there's loads of stories of companies where investors turned them down and said it's never going to happen, and all of a sudden they're the icons of today. And you look at their share price during the .com, even at the peak of the bubble, it was nothing compared to where they are now.
Yeah.
And it's almost, again, looking at cycles, it's almost guaranteed that within the crypto, blockchain, digital asset space, the same is going to happen.
Yeah.
So even if we have had that .com style bubble burst with what we've seen with Bitcoin and others, wait till you see the next bull run.
Yeah.
Because what will follow this deflationary period, when the recessionary period starts and ends, don't know.
No.
But what will likely follow, what will follow is a period of prosperity. We'll see a changing world order. We'll see a shift from American dominance to a dominance of another global power. We'll see political shifts on the national level. We'll eventually see policies that reduce the burden of inequality, and that will quell and calm some of the social angst and disorder as overall prosperity begins to rise. And accordingly, underpinning all of that and powering all of that will be the next wave of technological development.
Yeah, it's critical. I just want to pick up your word about assets versus currencies, because in a sense, assets do add value.
Yes.
Okay, and currencies are a means of transaction. So it's important to go, in crypto, there are cryptocurrencies, and people can be right to say, well, there's nothing to them, they're just air. And there are some of them like that. It's kind of like, there's nothing to that. But the ones that have utility and add value, that's a real asset. And it might be something because of technology shift that it's hard for you to grasp, because code is value and apps give value. And I always give the example of, when people say there's nothing to crypto, well, is there nothing to Uber and Airbnb? Yes. They've got no value, regardless of what you think of those companies. They are built on networks and code. They're built on their apps essentially.
Mm.
That apps with huge value, and they bring value to a certain area. So it's important to look at the difference between currencies, which actually right don't really have intrinsic value, fiat currencies, as some cryptocurrencies don't, but assets that actually have value because they bring utility. So we can almost relate that to the .com bubble, where a lot of that was just speculative money, as a respective money in the crypto market. But what's interesting about the future bull runs, which happened in the .com continuation of that growth of the internet, was when these things come to actual utility. I mean, it has begun.
Yes.
But rather than people saying I'm putting money in there, speculating this will have great utility, and I'm seeing the value before ahead of time, there's a time where actually there will be functioning adoption and utility to a huge number of these successful projects, and that's where the growth is in a whole nother, whole nother iteration, really.
Yeah, and again, looking at patterns, I mentioned how we saw interest rates generally rising since World War II. What do we see since the collapse of the dot-com era? General reduction in Bank of England interest rates, as a trend, bringing a low period of stability, which came through a period of prosperity, the boom period that technological breakthrough created. So again, zooming out, what are we seeing? Rising inflation, rising interest rates, a global shock. At the end of that period, driven by these new technological shifts, we'll see the next boom period.
Yeah.
And I feel wonderful for my son because as he grows up, he's going to grow up in that phase. But what do we know about boom periods? When prosperity increases, people party, they stop pondering, they stop paying attention, they start, taking on, you're becoming more careless with their spending. And overall, guess what happens? We end up in the next cycle. It just happens all over again. And I always forget the specific phrase. You talked about it in the last episode, Sam, how, strong times build weak people and weak times build strong people.
Yes, yeah.
That's happening now. We're in weak people are in charge right now, following the period of prosperity during the 90s and early 2000s. And that weak leadership is playing out all over the world. The centralized authorities that we're railing against right now are governed by fundamentally weak people, poor quality leadership. Nick Hudson on the Elevate podcast last week said that, looking at the poor quality of presidents and prime ministers we've had in most of the major countries over the last decade. It's a reflection of what happens after that period of prosperity.
Yeah, totally, Dan. I'm seeing a picture in my mind grow that, how can we be that, you got this sort of sine wave of the booms and busts. How can we be that central line that's just grounded through them? So exactly, rather than being sucked too high with the highs or taken down by the lows, that we experience them, but we're staying quite, bringing awareness and constance, a level of constance to our being through them, which is like, you're not in a bad place because it's a bust cycle. You're not in an amazing place with a boom cycle. You're just in hopefully nurturing a grounded place through both of them.
Yes.
Because they've got different qualities to them. They're neither are great or bad. They just have different qualities, and so that's again about, which I think these unsanity cycles, it starts to do that for me. I know it does, Dan, that I'm not identified with the cycle. I'm just know where I am within it, and it's subtle, but it's profound at the same time of that change.
Yeah, and to make it really simple, just to really bring it home to a really simplistic example about how we can navigate each cycle, and there are exceptions to this rule. And if you think about the seasons of the weather, winter season, what do we do in winter physically? Well, outside it gets cold and wet, so we wear warmer clothes, we heat our homes more, we eat different types of food that are in season at that time. We don't tend to wear shorts and t-shirt all year round. Some people do. There's always one.
The Geordies.
But my basic point is this: we take different actions during different phases of the cycle because the circumstances change in order to preserve our basic sense of living. But we can also, create high standards of living within every economic cycle. We can, if you stay indoors during summer the entire time, okay, you might avoid getting burnt, but you'll avoid the kind of most pleasant redhead. I was saying before we started just how pale I'm looking at the minute. I'm waiting for spring season to move into summer. I don't burn that aggressively. That's a side story. So, yeah. But the point is, we take steps, and even making that point in a joking kind of way, I take steps to make sure that I don't frazzle myself during summer.
Yeah.
But I do so in a way that enables me to enjoy the season.
Yeah.
So on a basic level, once we know what happens each season in the weathers, and we know what to do. We don't have to think about it once you know what the patterns are.
Yeah.
But what most people don't do, because it's not taught in schools, it's not common knowledge, people don't learn the wider seasons of our lives, the economic seasons, the social seasons, the political seasons. But the reality is, once we can begin, and I'm only getting to grips with this now, Sam. I studied economics at university, for goodness sake. And I worked in financial services for 8 years. I lived through the financial crisis of 2008 firsthand and viscerally saw it. Yet still, now it's just like the penny is dropping. And it's like, it's like now I can see for the first time. It's part of that awakening.
Well, we don't typically get taught the bigger picture and the bigger perspectives, do we? Which is why specialization in our education system is such a powerful way of controlling people.
Yes,
because they don't have a holistic view. So it can be you get rewarded in our society for being very specialized. Often the high earners, they're very specialized and they don't have a holistic view. But that lends itself to the control structure, meaning that people they can be parts of a machine. They can't actually see the whole thing and don't know what they're part of. So it is a really interesting, setup that they reward those people who don't have holistic views. You get rewarded for being very specialized.
Yes.
And as we know, actually making you more agile, adaptable, and successful and be able to thrive as your full extended self does require you to have a broader picture.
Yes. But that's where it gets really interesting, because once we're able to understand the seasons, economically, politically, socially, culturally, fundamentally, then we can also learn how to prosper and flourish and thrive in every season.
Yes. Tailor actions to them. Yeah,
I'm only starting to learn this now. But I'm seeing it. Like I can already see, and what's bizarre and frustrating is in other areas, I've always had one of my distinct strengths has been pattern recognition. Many evolutions in technologies I've been able to spot 5-10 years before they hit mainstream adoption. Yep. It's just been, it's almost. And if I'd ever had the capital as like a 15-year-old to invest in the future, I would be one of the elite that you're worried about, probably. Well, hopefully, I wouldn't be one of the elite that you're worried about. Because hopefully, I'll maintain my.
You'd be a genuine benefactor.
Because to that point, there are plenty of genuine elite benefactors out there. There are, and I've been listening to. I've been looking for examples of those who haven't been corrupted by greed and power. That's a whole different topic.
Real philanthropists rather than the phony ones that are on our screens, most of the time.
Yes. But my point is with this now, and particularly with this podcast and what we're trying to do with the Navigating the Financial Reset program, is to bring that financial education and the fundamentals of understanding the seasons is so powerful, because it gives us all the opportunity to assess in the same way that we would when we enter into the winter season, we warm ourselves appropriately, and in the summer we go into a period of prosperity and enjoyment. The same is true now, and that's why during all seasons there are people who prosper during every season. But what happens is there is distraction at every level, every season. So in times like this, we've already referred to it. We get distracted by the polarization. We get involved in the debates, the us versus them, the trans story, whatever polarization is happening, we get caught, we get distracted. But the same is true in a period of prosperity. We get distracted by the prosperous period. We party. We're no longer pondering. So the key is being able to ground ourselves and become conscious, become aware, become awake, if you like. And as such, we can always be discerning. We can always ground ourselves and understand. I love the term uncharted territory and navigating the financial reset, because we're tuning into the compass. We're understanding where we are in the cycle. And as such, we're staying present to the risks and opportunities. And it gives us that power to make decisions that we would not be able to make if we didn't have that understanding, because what happens in times like this end of the cycle, we go into a cycle of panic and fear, and people tend to and I saw that firsthand during the 08, 09. Most people bury their head in the sand and kind of wait for it to go over, to blow over it. And during that time, we see, as a result of recessions, standard of livings drop, people go into poverty, businesses go out of action. We see all of these things happen. And one of the things that I pledged when I left my banking career behind was that I'm going to make sure that when a time comes when this happens again, I'm going to make sure, I'm going to put myself in a position where I can help prevent that from happening for as many people as possible.
Yeah. And what's the key tenet, Dan, is agility.
Yeah.
And adaptability, like whether it's your business, relationships, it's able to course correct and change. And so the biggest trap is sort of being attached to a status quo and thinking this is how it will be forever. As we said, that goes against one of the fundamental laws of everything we talked about last week. Change is the only constant.
Yes.
So the trap is thinking, I like where I am now, and any threat to that, I'm going to hold on. It won't work. So being adaptable and being agile in every walk of life is what leads to you thriving. You and not being attached and being almost feeling trapped where I'm in something I don't want to change. I'm going to stay there. But there are always ways you can adapt and move with it. And absolutely, Dan, bringing awareness, and I know this from every facet of my life, that bringing awareness in while you're doing things can change your experience of them. Because we discussed it, like even on the food journey. If I eat something bad unconsciously and I don't even realize I'm doing it, that can be addictive. But if I'm bringing awareness, I actually go, okay, I really want to try this chocolate cake and live it. It even transforms the way you digest it. I mean,
yes.
It's so almost, and also by looking at cycles, we're getting the unconscious drivers and bringing them into our, in bringing to the surface, so we're aware of them. And then it doesn't mean you have to avoid anything. You can then be involved and go, hang on, and know you're in the top of a boom cycle, and you can watch yourself being overexcited and greedy, and look at it and catch it and go, oh, here I am, rather than being fully identified with it and pulled around. So it is bringing that awareness through wherever we are. And that's what I think is the grounding energy.
And again, to bring it back to just a simple, relatable examples, again, we've talked about some of the structural and systemic cycles, how they conflate. We can start to understand, even you talk about eating cake, right? So, there are some people who have a taste for cake, for sugar and certain saturated fats, and that's their staple diet. And as a result, they have a different body type to those who have a balanced diet. So, again, we, in order to live healthily, require to have a balanced diet, and we need to keep our greed when it comes to food in check. It doesn't mean that we don't have the cakes and the foods that are deemed to be not so good for our health, but we counterbalance it with a very diversified diet. And the same is true again when it comes to economics, because what we were talking about on Wednesday in the workshop is, because what will happen right now, the reality is people are saying, well, if it's so easy to spot these patterns, well, firstly, it's not that easy, because again, we've talked about how the short cycle within the big cycle, it's actually, whilst we can see some trends, we don't know when the peak's going to hit or when we're going to start going into contraction. We can start to say that with relative certainty that they will happen, but we don't know the precise nature. And we also don't know which specific companies are going to weather the storm. No. We don't know which specific crypto assets or digital assets are going to...
But that's interesting, because the smart players don't get hung up on that.
No,
that's almost a retail investor mindset, which is, I want to hit the bottom and I want to hit the top, and that's almost unrealistic. And the smart money don't try and do that. So I'll give a great example now. I understand we're in a bear market, but that range with the bear market could be, between 10,000 and 30,000 Bitcoin, and all the other assets could be fluctuating, between 50 and 100% of their value. But I understand that overall we're in a bear market. Yes. Therefore, it's an accumulation time.
Yes.
So everyone's scared. No one wants it. I'm accumulating. When things get high, you don't know exactly. You never know when it's the peak. You might go higher. But if you're in really good profit, then you systematically take profits.
Yep.
You might leave some because you do want some excitement of maybe on that. But there are ways of doing that in a more balanced way, Dan.
Well,
And I
definitely.
know that like the smart money average in during low times and they average out during high times. And they're
Absolutely.
not trying to hit the, and it's almost like we go for the Hollywood moment. I want to buy the bottom and sell the peak
Yeah.
and sort of retire in one move. And what that is kind of like this wish to have this kind of like almost finality. Whereas if you just systematically rode the waves in that clever over time, you would amass, much greater wealth and it'd be sustainable than trying to hit this one-time jackpot.
Yeah.
And I think that's interesting psychologically. That's almost the short-termism, like I want it done in one go. Where actually, if you were just doing it in a more balanced way over a few cycles, you would the likelihood to get there is almost guaranteed to get there rather than try and go for the jackpot.
It's so it becomes so glaringly obvious when we break it, because that's driven by the magic bullet mindset.
Yes.
It's driven by, but that's when you're also, again, you're caught up in the emotional cycle of
Yeah.
the cycles of fear and uncertainty. You're doing it, and that's why people buy in at Bitcoin at the peak, because
Yeah.
they're going for the magic bullet, but that's also why we see yo-yo diets. If you bringing it back to another relatable example, the people who are consistently healthy aren't the people who go through yo-yo diets.
Yeah. Yeah.
They take a balanced approach, and as a result are healthy over the long term.
Yeah.
And the people who follow the kind of yo-yo diet strategy rarely reach a period of consistency,
Yeah.
because again, they're on the emotional roller coaster, and without deviating. I mean, that's a whole conversation in itself, how to break free of that emotional roller coaster. It's, my wife's a personal trainer. She spends, people invest in her because they want to get a certain physical result, but she actually, thinking that they're investing in fitness and workouts, which they are obviously. But Lizzie spends most of her time bringing people back to that holistic sense of balance, and actually breaking those emotional variances that drive the patterns of overeating, etc. But the same is true in the financial space. So again,
universal.
And within one of the worksheets that we gave out this week, we shared some of those investment principles, from some of the most iconic investors and financial traders of all time, and they are the ones that have prospered through all seasons. And they're exactly what you said. They aren't looking for the prime moment at the peak and at the base. They're taking a balanced approach.
Consistency. Yeah, they're doing good solid actions consistently. It's like the old gym analogy again, isn't it, Dan?
Yes.
Like go there for 24 hours and try and pump yourself to. Whereas actually, if you went for half an hour every day for the next year, and again, it comes back to your haircut. You don't see the results as quickly.
No.
But actually, at the end, you go, wow.
Yes.
And that consistency of action and bringing balance to things, transforms it.
Yeah, and if you've picked a good barber and they do a good job, you have that like win moment. It's the same when you make your when you make the sale, when you've taken that consistent action, then you cash out. You may have a big payday, but it's the consistent action that preceded it.
Yeah.
And going back to the point about balanced diet, the reason I brought that up is because the key point again that we talked about on Wednesday was diversification.
Yeah,
that's the whole point of the balanced diet analogy. We eat the rainbow was one of the best pieces of advice I ever had. We're having a diverse diet. We take a diverse approach to our investments.
Totally, you get it. You get it in crypto. People almost become married to a certain asset. Dan, it gets this kind of tribalism. There are things like the XRP army. It's literally they view themselves as and I think that's a very dangerous investment thesis. And the top people wouldn't be doing that, which is you could be really confident in that asset but who knows what could happen? And if you're all on that, then you are going for the Hollywood moment.
Yes.
And actually, it doesn't take much to something unforeseen to happen, and all your eggs are in that basket. Whereas, I feel very comfortable when you're nicely diversified across different asset classes, but within an asset class, you can diversify actually within it, and current eggs in that can give you that peace of mind of I'm well balanced again.
Definitely. And some people may get that bet correct. It's again like going back to .com. There would have been people who advocated and ardently said that Apple and Amazon, these are you would have had the Apple army, you would have had the Amazon army saying that these are the ones, and they would have been, some people would have been right.
Yeah.
But there would have been people saying the same about other companies that collapsed. And we'll see the same now. But you can take that risky bet and with high risk comes obviously a higher return.
Yeah. And if you're over invested, it's like anything, you could then have your own cognitive bias because you don't want to see signs that because it's like anything. If you get over invested emotionally in anything, then that can get in the way of you looking at something coolly and calmly.
Yes.
So again, that tribalism is like that's almost a dangerous outcome. Don't marry. I mean, it's a strange thing to marry an asset, but in this day, that's no surprise. But don't marry it. Be ready to pivot and be agile.
Well, in the same way, most people don't marry the first person they meet. You have to get a sense of what you really want and what's really appeals to you, and the same is true for investing. But
absolutely,
even on that point, when people talk about overwhelm of investment, it's like choose something you're interested in. I'm interested in online media. I'm interested in decentralization. I'm interested in companies that can improve human flourishing, that can bring greater health to more people. Natural health.
Understanding what you hold. I always say that, and it's a very understandable situation. The number of people who've got into crypto on a friend's advice very quickly in the last 3 years. No judgment on it, and understand. That would be me as well. Like when you don't know what you hold, you're fine with that in a bull market because you don't care because it's just it's a number going up machine.
Yes.
But when it's going down, you don't know what you hold.
Yes.
And you have no idea.
Yep.
It is that makes you very fearful. When you know what you hold, and again, you don't have to understand the tech perfectly, but start do some research. I did it with my mum as a portfolio. She's got no background in tech or she's a Luddite. Lots of levels, but a lot of it is understandable about the core principles, what problems this is solving, and why it has such a huge future, and therefore that's really empowering. So you're not thinking I'm holding this just hoping because somebody said. I'm holding this because I can see why this has huge potential and see this makes sense. So like you said, Dan, what makes sense to you, and getting some modicum of that in everything you hold is important.
Definitely.
Just for your own peace of mind. I mean, some people do want to outsource and go, okay, I trust a good friend and they're happy with that. But you're going to be more empowered through challenging times if you have a feeling yourself of why you're holding it.
Yeah. Yeah, I think your mum watches this show, doesn't she? Just called
she does.
Show Luddite, so apologies.
Well, no. Well, I'd argue I'm a paradox of I still print out a lot of my emails, Dan.
Yes.
So I'm all on the Sam from Crypto Cafe. I got a printer and I'm tangible. I like to sort of see my papers right on the screen. So So it was. I reassure you, Mum, it was a compliment.
Yes.
Well, preserving good values.
Yeah. Well, Russell Brand was on the Joe Rogan show recently, and Rogan was mocking Russell Brand for being the guy who's always got like papers in his hand. And he does. I didn't realize it until Rogan pointed it out on every episode of his podcast. And I went to see Brand's show in Bristol, and he's just walking around on stage with a cluster of papers. But it happens.
Yeah, that's what I feel. Yeah, and you made me feel guilty, Dan. She's not alone. She's got a crypto. She's a crypto investor. She's actually one of the most ahead of the curve. People of her age around. So yeah.
Wow, the truth.
Apologies, Mum. Hello.
The truth hurts sometimes, But back to the point of diversification. The point of it is that the most successful investors will diversify their portfolio. Yes, they may still win the big bets. They may still have that within their overall strategy. But the point of diversification is it reduces your overall exposure to any one asset individually or asset class, which means that if any particular asset or asset class performs poorly against expectations, your overall portfolio may not be as affected as much. So it's important to recognize that every asset class has different risk and return characteristics, as we talked about within the last workshop. And the balanced approach of taking a diversified approach to your portfolio, your investments, your decisions will give you more consistent results over time. And that's played out with every major investment firm, every successful trader. It means that you're well positioned against market volatility.
Yeah.
And volatility can happen at any stage of the cycle, whether you're in a boom stage, although, a lot of people, and again, what I saw during the financial crisis of 07, 08, 09, is that a lot of companies that went under perhaps should have gone under because they'd ridden the wave for so long that they were no longer acting responsibly with their finances.
Yeah.
And okay, no one wants to see their business. I don't want to see any business collapse or any business owner or employees go through the stress of that. But it's a reminder of how important it is to be prudent and discerning at every stage of the cycle,
and be positioned so that you're not pulled around by the daily moves of the market. And I think about my early crypto days, and with almost that willing the market up, and if it's not going up, that's not a healthy place to be. You've got to have an A or B. That I've got strategy, and I've got ways to adapt whether it goes up or down. It doesn't really matter in the short term. So I think it's important to have that perspective, and that's why going through that is really helpful. But also, hopefully, I can get people, and through discussions, we can get people quicker through that process and that awareness faster than it might take if they were just on their own without having good discussions about it. Because I got there, Dan, by having endless discussions of this length and depth with people like yourself.
Yes,
that's what's really got me through and advanced in terms of becoming balanced and bringing awareness to things is from the bigger discussions.
Yeah, There's so much to this, Sam, and this has been an amazing conversation. I think the thing that's playing out in my mind is, as having talked about these cycles, I can imagine some people saying, "Well, now we see these cycles. Why isn't everyone rich?" It's not as simple as that. It's within, as we said, that there is still volatilities. Understanding which assets or companies or stocks or crypto choices are going to be the ones that prosper is still a difficult decision. But when we have that broader awareness of cycles, we are much better positioned to make informed decisions.
Yeah.
And the hard fact is that most people aren't aware of these patterns, and most people go with the tide.
Yeah.
So the opportunity in this day and age right now, if you're watching this, is to make a decision to make the decision to invest in yourself.
Totally, Dan. That's what transforms it. Is actually even the best economic factors. If you're not grounded and not got the skills, you can screw it up totally. Whatever's going on. So you could screw up a whole bull market, even though it seems so it does come back to you and your own development, and then you're going to be more successful at everything you do.
Absolutely,
which is why it does come back to you. And you're absolutely right. Like putting that work in now and understanding it's key. And I also think if I put, because we're in a bear market, Dan, if I put a crypto cafe on locally, the numbers will be small because we're in a bear market.
Yes.
But I always say to people, come, you're the ones who are going to do really well.
Yes.
If Bitcoin goes above 60,000, the room will, I'll be flooded with people wanting to come.
Yes.
But they want to come in and buy the top because it's the hype. So I always salute people to come, because if you're interested at these times, that's actually where the money is not made in the bull market.
Yeah.
It's made in the bear market. You reap the rewards in the bull market. And I think that's what happens. So people are out of tune with cycles, and they all pile in when the booms happened and happening, where actually the people that make money out of a boom is because they prepared in the bust.
Yes, and I think that's so important, because we're generally not speaking to seasoned investors on this show, as our audience. There are people who are more experienced in their own financial literacy, and they've made investments, but a lot of people are coming to this seeking to understand how to navigate these times, and they're learning these concepts for the first time. And some people might think it's saying, "Oh, very well, talking about these different asset classes, Dan, these diversification strategies. I understand these are important, but I don't have the assets to invest yet." And I want to say that's also okay, because again, as Sam said, during times like this is a period of wealth creation as well as accumulation, because more millionaires, billionaires, and financial prosperity is created during times of financial recession. We're not in that dip yet, but we can see it coming. And it's about positioning yourself and being prepared for that, so that you can start making informed decisions. And there's also, it comes back to working on ourselves.
Yeah.
When I left my corporate career behind, I was probably in my peak prosperity, or at least I had been through a peak prosperity in my lifetime. But then I went through a massive dip of my own, because I started out in business. I made all the mistakes you could possibly make, and I got myself into debt, and I had to build myself up again. So I know what it's like to feel like you've got nothing. I really do. But everything is still relative. We could go and compare on, most of the world, the developing world, lives on less than $1 a day, and we can start to see that actually most of us are in a privileged position, but it's all relative.
Yeah.
The key is learning how you can add value to the world, and it's also learning how you can make value work in your favor.
Yeah.
It's And I think perhaps there's a bigger conversation, Sam, for our next episode around the mindset around money, because because during this particular cycle, when there are vast inequalities and many of us are fighting against the power structures, we can start to resent power and we can start to resent money.
Yeah.
And what that does is detract, because empowerment to find one's power within as opposed to power over one another, having that sense of inner power is powerful as long as it's not wielded over others, as is having a sense of prosperity. But during times like this, people start to have negative connotations with money, and that can become a limiting factor that then actually prevents people from experiencing the prosperity that is available to them. And again, I've been through that. And again, it's been a resurgence over this period, railing against the power structures. I've had to catch myself and think, actually, power in itself is not the problem. It's how it's wielded and the
It's
intention.
intention. The word always comes down. It's the intention. Sometimes people get very attached to binary ideas of this is bad. It's the intentions. Everything. It's like even in terms of symbolism and numerology, people can get very attached on that's bad. That it's the intention behind it. And I always said I want to meet people and really judge them on their intention rather than the kind of binary labels of, are they rich? Are they, there can be a kind of overpride of, I'm, proud to be poor because rich is evil. But, it's about people's actual character and their intention and much more than, that binary, always those binaries down, always come back to them, don't we? They're problematic, and oversimplification. It's intention. What's your intention for abundance? I know I'm excited to be abundant for tangible, positive reasons, in line with all the values I stand for. And a lot of people in this community, and a lot of people who be watching and listening to what we stand for. That's what the abundance is about. And that's where almost, if you look at crypto, because there are a lot of crypto millionaires living in Dubai just partying, they think, well, it's just about making money. Well, that's what they've chosen to do with their abundance. Okay, that was their choice. That's their path. That's not. I don't know. I know many people in crypto. Investing because they want to get more options, because it's about having more options to put in place what we want to do for positive change and infrastructure for. Look at homeschooling projects. There's a myriad of things we want to support, Dan. And we're in a physical world. We're in the reality. We need to have more options, and that's where my drive comes from. And I know a lot of people similarly. I know that's where you're at.
Absolutely. Absolutely. Absolutely, it's a drive. That's why there's such pace and urgency in the work that I do. It's not because of the external fear and uncertainty. It's because I want to be able to invest in the change I want to see in the world. That requires me to add more value to the world, because there's the old adage, to get everything that you want in life, help others get what they want in life. It's having a service mindset. It's being contribution focused, contributing to the world. But I will also say that desire for contribution isn't mutually exclusive to self-advancement, because
no, totally not. No, you could do all that, and you not saying you would, but you can pop to Dubai. There's no judgment on. It's all of it. It's all in there.
Well, but the reality is that those that focus on contribution, and it comes back to, Zig Ziglar said it. Help enough people get what they want, and you'll get everything that you want. The reality is that if you have the right focus on making a difference in the world and contribution, then you will, experience your own prosperity, or you'd be more likely to. And of course, I want to provide a wonderful future for my son and my family, and I want to be able to have the assets to make a difference in my community. So
that's why I find it so valuable, and so I don't use that word. It's heartwarming, but the work we're doing in the Navigate the Financial Reset, because we're people of this mindset. That's what's so rich about it. We're not talking about cold hard investing for people to get in their ivory towers and have luxury cars. Most people generally, we're looking to improve things. And that's why it's so rich. There's so much to it. It's a road towards solutions and improvements and coming out of this system what we've been in, and creating, Dan.
Yes.
It's not a nihilistic sort of wealth generation for the sake of it. It's about creation and options and building networks and communities and all that goes with it. So that's why I'm so excited to work with his community, and that's why I've been called to do it.
Absolutely. So maybe we'll expand on the mindset piece next week. Sam, looking at money mindset and expanding this conversation. We'll see what happens with the earnings results. We'll have a look at the markets. What will follow this eclipse.
Yes.
It's going to be fascinating to see how the next few weeks unfold. So on that point, please make sure you subscribe to the show. The next few weeks are going to be fascinating. You're going to want to make sure you catch the next episode. You've also heard us talk about some of the programs that we've been involved in and the workshop we've been running. We've just run a fascinating workshop as part of the Financial Reset program, Navigate the Financial Reset program, where we looked at these different asset classes and diversification and the different economic cycles with our cohort that are currently working with us. If you're interested in finding out more about that, you can go to weareelevate.org/NFR. That's NFR for Navigating the Financial Reset. We've also talked a bit about crypto and blockchain, and a lot of people getting their head around the basics and the fundamentals and the jargon is often the first step, which is why we put together the Navigating the Digital Assets program. It's an inexpensive program. You can get access to that at weareelevate.org/digital assets, and that's going to give you the real fundamentals plus the good, the bad, and the ugly from a very holistic standpoint. So there's a couple of things there for you. You'll see the links in the description to this episode. That's an invitation to you if you would like to take this next step with us. But
I've just looked at on my calendar down there that the next Crypto Cafe event we're doing, part of the Navigating Financial Reset program, is just before the next eclipse.
Wow.
So another interesting time. We just had that one, so we're meeting again on Wednesday the 3rd.
That's right.
For a Crypto Cafe sort of get together and share our thoughts, discussions. Obviously I'd answer everybody's questions and explore where we're at and get grounded in what's going on at the time. So excited for that.
Fascinating. The next few weeks are going to be fascinating. Well, thank you, Sam. This has been another amazing conversation. And thanks for tuning in to this episode of the Uncharted Territory podcast. Please do help us share this. We are, I think, one of the few right now talking about this subject with the kind of broad view, looking at the different elements that contribute to these conversations. So please help us share this. And if you know any young people who need this financial education, please pass it on. We looked at our YouTube stats last week. We haven't got a single person under age 45 who have watched this show yet.
Dan, the universe wants us on TikTok, but I've got a kind of visceral, oh God, but are they all on? Is everyone? Tell us in the comments. Is everybody under 45 just on TikTok?
I think, Sam, we're running into an hour and a half on this conversation. Right. We need to get this we need to say everything that we've just said in under a minute, and we'll be sorted.
Right. Okay.
That's what it is. Under a minute conversations and dancing at the same time.
Right. Okay. And maybe put some kittens in it as well.
And some crazy filters. Yeah. That's what we need to do. Yeah. So, or maybe we just need to get a TikTok edit.
But that's our challenge then, bringing long form big thinking to a short term, clickbait generation. That is a challenge, isn't it? But we're on that path. We want to get these conversations going, because I know that when you do get people in these conversations, it's rich.
Yes.
People have got all these thoughts in their mind, so having an outlet for them, with each other and maybe with us, I know could be beneficial. It always helped me.
Yeah. I want to be fair to young people. If I look back to when I was, in my youth, that shows how old I am now, because back in my day when I was a kid, when I was a lad, 15 or 21, actually the people I related to were the people in my age group. I almost rallied against the generation above.
Yeah.
But now looking back, I wish I'd that elder concept again. I wish I'd had. Yes, yeah. I wish I'd had a connection with an older generation that could help shape and guide. And again, I think it's so important that we cultivate that. So if you're watching this, you got kids, you got young people in your life. Please share this and ask them to watch it. Ask them to give us a feedback, because we want to understand how we can have this conversation. Because the young people still do have the desire for depth. I know they absolutely do. Yeah. So it's an important conversation, but it'd be fascinating to get your feedback. Yeah. So please do share this with the
and maybe we'll get a younger guest on at some point, Dan.
Yes.
And then see if people can relate more to them. But yeah, it's rich from wherever you're coming from, these conversations, because they're universal, aren't they?
Indeed. All right. Well, thanks again for tuning in, everyone, and we look forward to seeing you on the next episode of the Uncharted Territory podcast.